Hello everybody, welcome to this webinar brought to you by Bursa Malaysia that is titled Sustainable Growth Through Exchange Traded Funds. Alright, so this is Shane Chu. I am the speaker for these sessions. So before we proceed, just want to check if you can hear me and see our webcam and also the slide. If you can see all these three, please type hi or hello in the chat group so I know that you can hear me. All right, hi everybody. Okay, loud and clear. All right, awesome. So we got so many of you, a few hundred of you online today, right now, to learn about what are exchange traded funds and how you can use it to build your sustainable wealth. So this webinar is brought to you by Bursa Malaysia and managed by our company LifeChamp. Now, before we proceed, this is the most important slide, which is whatever we share today is only for educational purpose. In no way that we give any recommendation for any ETF for you to buy or sell any ETF. So if you decide to buy or sell any securities mentioned here, you do it at your own risk. Okay, awesome. So allow me to briefly introduce myself. Okay, and for those of you who have been following through our webinars, you would have known me quite a fair bit. So I'm a financial speaker, trader, and investor with over 10 years of experience trading and investing in local and international stocks, ETF, and currency. I started investing when I was in university, so right now I have more than 10 years of experience. So I'm also a certified professional trainer by IPMA UK. As a speaker, I speak regularly for Bursa Young investor education seminars, investment banks, and also technical charting companies. I also design and conduct stock simulation games and workshops for Bursa Malaysia nationwide. And to date, I've trained more than 10,000 individuals in stock investment. I'm also a frequently invited guest speaker for over 20 universities nationwide to teach investment. And currently, I am also often invited by C Plus FM to go on the talk show to comment about the market. All right, so that's a little bit about my background. And today I'm going to share with you this topic called sustainable wealth through exchange traded funds, which is called ETF. Now, I'm sure you have heard of ETF one way or another. And in my profile, it's written here now, ETF. So today we're going to talk about exchange traded fund, what exactly this is and how you can use these financial instruments to build your wealth. So what we'll cover here is number one, we'll talk about what are ETF and its characteristics. Number two, we're going to learn the difference between ETFs and mutual funds. And number three, we're going to learn why should we invest in exchange traded funds. And number four, we're going to understand how to evaluate an ETF. And the fifth is we are going to look into insights into the exchange traded funds on Bursa Malaysia. So are we ready to kickstart today's session? All right, let's go. Now, this is the FBM KLCI over the past 10 years. Okay, so the FTSE Kuala Lumpur Composite Index since the year 2010 to until 2020. This is about 10 years period. So you can see that our index reached a height of over 1,800 points, and now we are at about 1,500 points. And today it is another bullish day, which is good news for us as the share price of the FBN KLCI index go even higher. So the thing is, can we actually buy into index? If you just want to follow the movement of the stock market, the broader market, can you actually buy an index? The answer is you actually can't buy an index because index serve as a reference point for us to know what exactly the market performance is. Are they our market today is bullish or bearish? So we can't buy an index. However, we can buy an exchange traded funds that want to mirror the index movement. Okay, do we have this KLCI ETF? The answer is yes. We have this FTSE Bursa Malaysia KLCI ETF, which is the stock code 0820EA. So if we look closely into this KLCI ETF, which is represented by this blue color, whereby the index is in a red color, you see on this chart, you see that the blue color mirror the movement of the red color index, right? Of course, There are some tracking differences here, but if you can see the performance, they are more or less similar. Okay, so we can't buy into an index, but we can buy into an ETF that tracks the index. So what exactly are ETF? So ETF, an exchange traded fund, is like a mutual fund that's traded on the stock exchange. So in short, you just imagine ETF is like a unit trust, okay, or a mutual fund that you would know that is traded on a stock exchange. So an ETF basically tracks an index, commodity bonds, or a basket of asset like an index fund. So every ETF will track an index or a commodity bond or a basket of asset, okay? And each ETF comes with their own investment objective. So an ETF invests in asset according to its investment objective that is designed, okay? So this is what the ETF is all about. So if we want to put it in a diagram format, so imagine this is a mutual fund. Okay, now mutual fund usually where you buy through a unit trust agent, right? You buy through your banker, for example. So your financial planner. So these are how mutual funds are distributed to retail investors. So what are the characteristics of mutual funds? Now, mutual fund offers you diversification because it is when you invest in a fund, invest in a basket of assets. So mutual fund allows you and enable you the diversification that you want with just a smaller fraction of your investment. All right, and because it buys into a portfolio asset, so it gives you a vast diversification that can reduce your investment risk. So mutual fund also will charge you a management fee, and then it also involves creating and redeeming units. Creating units means that when they want to buy the fund manager will have to, the fund house will have to create a unit to sell to you. Okay, similarly, when you want to sell the mutual fund to back to the fund, then you will redeem the unit. Okay, so a mutual fund is like open-ended fund, so the size will expand or shrink depending on the demand in the market. Okay, and then they will charge you a management fee, annual management fee, so that it's enough to pay their portfolio manager. So when you buy a mutual fund, you will be charged. In Malaysia, it's called initial sales charge, generally about 5 to 6%. Then this 5 to 6% is usually paid to the distribution channels, whether through a financial planner or not. Then the asset management fee or trustee fee is charged on an annual basis. So these are mutual fund. So you invest in a fund with hope that the fund manager will build, will help you to build wealth. And when the funds become more valuable, then you'll be able to cash out, multiply your wealth. So usually when we go to mutual funds, we actually do it a bit more longer term. We don't really trade in trade out so regularly. So that is a mutual fund. So what actually are shares? Now mutual funds are indirect investment whereby you put your money there, you let the fund managers to do for you. Shares, as opposed to mutual funds, are direct investment whereby you are 100% responsible for all your buy and sell decisions. Of course, I guess you will know what are shares. So shares are publicly listed, use a T+2 settlement. That means when you buy share, 2 days later it'll be credited in the account. When you sell share, 2 days later you'll be debited from your CDS account. You trade through a brokerage account which you open with a stock broker, and then it has low transaction costs. So these are the characteristics of shares. Because low transaction costs will involve that you only pay brokerage fee, pay the stamp duty, pay the clearing fee to the exchange, and some SST on the brokerage fee. So these are low transaction costs, as opposed to mutual fund. When you buy the fund, you actually involve already 5 to 6% of initial sales charge, and then every year there are about 1 to 2% of management fee and trustee fee as well. So if you buy shares, it is less than 0.5%. Okay, all the clearing fee, stamp duty, and the brokerage fee add up, no, not even 0.5%. So it's very low transaction cost. So if you combine these together, one mutual fund and shares together, then at the intersection of this, is actually an ETF. That means ETF is publicly traded. ETF also has a T+2 settlement, trade through a brokerage account, and also charge you a very low transaction cost and give you a diversification when you buy into a portfolio asset. And then ETF also charge you annual management fee, but which is much lower because it is a passive fund. Right? ETF also involve creation and redemption of units. So when you combine these asset together, okay, these different instrument together, this is an exchange traded funds. So let me delve deeper into the differences between exchange traded funds and mutual fund. So ETF are mainly passive. Management style is passive. Passive means that the fund manager will mirror the performance of the index that the ETF tracks. So if an ETF tracks, let's say KLCI, then the fund will buy into the 30 constituent stocks that make up the FBM KLCI. So if the weightage of the FBM KLCI of public bank is 11 or 13%, for example, then the 13% of the capital inside the ETF will go into public bank. And if the fund, if the FBM KLCI has 11% in Tenaga, then the ETF will invest 11% of its fund into Tenaga. So for Maybank, to Top Glove, to Harta Lega, okay, according to the index weightage. So an ETF actually tracks the index, and ETF is passive investing because it represents the market. So whereby a mutual fund is an active management style. A mutual fund objective is always to beat the market. Okay, they always want to benchmark the market. The fund manager say we want to outperform the market by how many percent. So that is a mutual fund active investment, whereby the fund managers have to constantly rebalance the portfolio or constantly buy and sell, okay, the constituent stocks inside, so that it will be able to achieve the outperformance objective. ETF, you buy through a stockbrokers. A mutual fund, you buy through a unit trust agents or financial planners. ETF, the price is known when buying and selling and is available on the exchange. You will know that what exactly the price is trading at the moment. And then the mutual fund, the price is unknown when buying or selling, as it depends on end of day net asset value. Okay, so when you want to buy a mutual fund, usually if a morning, let's say you go or you talk to your financial planner that you want to buy, or you go to your bank, and then your bank sell you some kind of funds, then you will only know, you tell them I want to invest let's say 5,000, and you won't know how many units of this you can buy until the end of the day. So this price is unknown. They will tell you, oh, 5,000, right? But at the end of the day, you will know how much unit you will get. So ETF is continuous trading throughout the day, yes, but mutual fund actually is no. Okay, you can only sell depending on the end of day NAV. Whereby ETF, let's say in the market, right, you feel that the market is already down, okay, since at the morning session, to prevent it plunge even further, you can sell in the morning. Whereby mutual fund, if you see 9 o'clock the market actually go down, you want to sell, you actually can't sell. You can only sell towards the end of the day. All right, so these are continuous trading. ETF is management fee because it is passive in nature, whereby the fund manager do not have to constantly buy and sell, as the index constituents never change. So they will just maintain the same exposure. So the management fee is typically lower than 1% per annum. Whereby for mutual fund, because it involve the fund management constantly, switch their portfolio or switch their do some trading, then essentially the management fee is higher because it's an active fund. ETF, the transparency is the list of holdings is published every day. Every day, if you go to the issuer website, you'll be able to know what are the shares, what are the assets inside the ETF. Whereby the mutual fund, the list of holdings is published every quarter. So ETF is diversified, yes. Mutual fund diversified, both have professional managers. Net asset value are both are calculated, but whereby in ETF the market price could be slightly different from its net asset value, because sometimes in a heated market it may have a overbought or oversold period, or whereby there will be a period whereby there's a suspension of the creation and redemption unit, then the NAV may differ, the market price may differ slightly from its NAV. ETF generally no minimum investment amount, whereby mutual fund, in most cases you have a minimum investment amount, and then ETF order type you can put a limit order or stop order. Okay, mutual fund is none, you just buy or sell. Okay, towards the end of the day you know how many units you can buy based on the latest net asset value of the fund. So these are the differences between ETF and a mutual fund. Okay, so let's talk about what are the ETF asset classes. Okay, so number one, we have ETF that invest in equity. Number two, we have ETF that invest in commodity, such as gold. Number three, we have ETF that invest in bond. And number four, we have a ETF that is composed of derivatives, so which we call them leverage and inverse ETFs. So these are the four asset classes that we have on Bursa Malaysia that the ETF tracks. Now here are the list of ETFs that are available on Bursa Malaysia, and just take a moment to go through. All right, so different ETF have a different tracking different underlying index. For example, let's take a look at the number one. Is the stock code is 0828EA, symbol is gold ETF, commodity is commodity, asset class is commodity. So what does it track? It tracks the Sharia, it tracks the gold price. Okay, so this is a Sharia compliant gold ETF issued by Affin Hwang Asset Management. So if you want to buy gold, but you want to have exposure to gold, and you don't want to have the trouble of storage. Okay, you need to worry where should I store my gold. Then you can buy this gold ETF. Okay, issued by Affin Hwang, which is also Sharia compliant. So it tracks the gold price. If the gold price go up, the ETF price will go up. If the gold price go down, then the ETF price will go down. Okay, the second ETF we have is Msci Bursa Malaysia KLCI ETF. It's issued by M Funds Management. So asset class equity. So the symbol is FBM KLCI-EA. So stock code is 0820EA. So like the name suggests, this ETF tracks the Msci Bursa Malaysia KLCI index. So when index go up, the ETF will go up. So the third is we have this ETF stock code 0822EA that tracks the FTSE ASEAN 40. So these are the 40 biggest companies in ASEAN. Okay, these are companies that are listed in 5 markets such as the Malaysia, Singapore, Indonesia, Thailand, and Philippines. So if you buy into this ETF, you will have exposure to some of the biggest stocks in these 5 markets, issued by Principal Asset Management. So the fourth is Principal FTSE China 50 ETF, also issued by Principal Asset Management. So this ETF track the 50 biggest and also the most liquid Chinese listed company on Hong Kong Stock Exchange. So right, you can buy into this. Stock code is 0823EA, TEM.-C50, that's the symbol. So the fifth is 0829EA. It's a Trade Plus S&P New China Tracker. For this, right, you see number 5 and number 6 are similar. What is the difference? Is stock code is EA, one is 0829EB. So EA one is denominated in Malaysian ringgit, whereby EB is denominated in US dollar. So both are issued by Affin Hwang. So if you want to have exposure to the Chinese market, you can also consider this S&P New China Tracker issued by Affin Hwang. Okay, if you're Malaysian, then of course you would prioritize this Malaysian ringgit denominated ETF. So you can also buy into these two, which is another 2 recently launched ETF by Affin Hwang called Trade Plus DWA Malaysia Momentum Tracker and Trade Plus MSCI Asia X Japan REITs Tracker. So these 2 ETF, this ETF Malaysia Momentum Tracker, DWA Malaysia Momentum Tracker, tracks the 20 momentum stocks on Bursa Malaysia using the smart beta approach. These two are using smart beta approach. So So you can find that maybe top glove inside. You can find the list of holding on the Afin Huang Trade Plus website. Go to the issuer website, see who are the stock inside. So these are the stock that move. Okay, they have momentum. So Afin Huang will put them under this ETF. Okay, just recently launched, I think, in July 2020. So this is how about 0837? This is a Trade Plus MSCI Asia X Japan REITs tracker. So how is this ETF different from REITs? So when you buy REITs, right, you are actually becoming a landlord that owns a portfolio of properties. So if you buy, let's say if you buy Sunway REITs, you buy into a REITs that owns uh, properties under Sunway REITs, for example, Sunway Mall lah, Sunway Towers lah, Sunway Hotel lah, Sunway office suite lah. So these are the REITs that owns by Sunway REIT. For example, if I am the REIT. But how is this ETF different from REIT? It's because this ETF invests in a basket of REITs. So even giving you more diversification. So when you buy into REIT, for example, if you buy into IGP REIT, you own two malls, okay, Gardens and Mid Valley. So if you buy into this Trade Plus MSCI Asia X Japan REITs tracker, it means that you have a instant diversification to the some of the REITs that is in Asia that owns Asia properties besides Japan. So it gives you a basket of REITs, invest in basket of REITs, right? So the Brunei, we have a MSCI Southeast Asia IMI Islamic High Dividend Yield 10/40 Index issued by IVCAP. So then we also have a few more funds issued by IVCAP, which is Dow Jones Islamic Market Malaysia Titans 25 Index. That means this track 25 largest Sharia compliant companies on Bursa Malaysia. Stock code is my ETF DJ. So Dow Jones Islamic Market US Titans 50 Index, also Sharia compliant, track the I think it's the 50 largest Sharia compliant stock uh, under this Dow Jones Islamic Market in the US. So and we also have this MSCI Malaysia IMI Islamic High Dividend Yield. The name suggests that this is a ETF that invests into high dividend yield stocks. Okay, so the one in red color means they are Sharia compliant. Every ETF issued by IVCAP are Sharia compliant. So we have covered 12 ETF right now. So this let's go into the 13 ETF, which is ABF Malaysia Bond Index Fund. This is asset class is a bond. Issuer is the N Funds Management. So so this, if you want to buy into a bond, then you can consider this bond ETF, because bond traditionally is only open for people high net worth individual. When you need to have about a quarter million so that your banks will offer you the bond. All right, if you don't have a quarter million in your account, then you usually would not be offered any bonds. But if you don't have a quarter, I mean, if you are not a high net worth individual and you're a retail investor and you want to invest in bond, you can actually invest in ETF that tracks the bond. So one example is you can invest in ABF Malaysia Bond Index Fund. So this is the only bond ETF available on Bursa Malaysia right now. So number 14 to number 19 is Leverage and Inverse ETF issued by Kenanga Investors and also Afin Huang Asset Management. So Leverage and Inverse ETF will give you exposure into a day-to-day business, day-to-day performance of the securities that or the index that they track. Okay, some give you double exposure, some give you inverse exposure. Okay, so for example, this Kenanga KLCI daily 2 times leverage ETF will give you 2 times exposure to the KLCI movement. Okay, if KLCI at 1%, this 2 times leverage ETF will go up 2%. If the KLCI down 1%, this ETF leverage ETF will down 2%. Okay, so inverse ETF that Kenanga investor issue is Kenanga KLCI daily inverse ETF. That means if you have a bearish view on the market, then you can buy into this inverse ETF. If the KLCI go down 1%, then this inverse ETF will go up 1%. So this is the inverse ETF. So if you think market is very bearish, then you can have a bearish exposure through investing in this Kenanga KLCI daily inverse ETF. Now, of course, we also have Afin Huang issue, the one that tracks the Hang Seng China Enterprise Index. So this is give you a 2 times leverage. Then this one give you inverse leverage. If this index HSCEI go up 1%, this double leverage ETF will go up 2%. So if you buy into inverse ETF that tracks the HSCEI daily, so if the index go up or go down 1%, then your inverse ETF will deliver you up 1% performance. Similarly, go for 2 times leverage tracker that tracks the New York Stock Exchange FANG Plus. Okay, so these are the tech stocks. So and also this inverse tracker. If you feel bullish about this FANG stock, then you can buy into this Trade Plus NYSE FANG Plus daily leverage tracker that give you 2 times exposure into this underlying asset. Okay, if you are bearish about this, you can buy into the inverse tracker. So these are the stock codes and the symbol. So these 6 belong to the leverage and inverse ETF. Okay, now today, because we talk about sustainable growth, so we are not going to talk about speculative instruments. From 14 to 19, these are more speculative in nature. That means it is for traders. The ETF leverage and inverse ETF are actually meant for traders, not for investors. So today we will going to leave this aside. We won't cover much into that, but we will leave it for the next webinar session to talk about leverage and inverse ETF. So essentially, just remember this leverage and inverse ETF is very short term. It's meant for traders and not meant for investors for long term holding. All right. So now, what you need to know in ETF. So here are a few things that you definitely need to know about ETF. Number one, you must know the ETF investment objective. So what is their investment objective? Like each ETF tracks a different asset, so you better know what asset they track before you buy into that. All right. So number two, you must know what are the risks that involve in an ETF. Okay, number one, we have market risk. So for the asset that you invest in, you must know what are the market risks. How will the market go against you under what kind of circumstances? Okay. So for example, if you buy into the Asia REITs ETF, so if the property market is depressed, okay, rental is bad, then of course the ETF will not perform so well, huh? So you must know tracking difference, or there will be tracking error. So we must know that in every ETF, it may not be able to mirror 100%. So there might be some kind of tracking difference of 0.5% or maybe 1%. So you must know how big is the tracking difference. So of course, the tighter it is, the better it is. The number third is currency risk. As you have seen, some of these ETF invest in a foreign market. So when the currency depreciate or appreciate against our local currency, then there will be currency risk. Okay, and also if you invest in an ETF whereby the currency appreciate, then you can have double whammy. So number four is liquidity risk. Sometimes there will be a liquidity issue whereby especially when there's a suspension of creation and redemption, then the market maker will not be able to provide you the best bid and ask. Okay, so sometimes there might be liquidity risk where you can't buy and can't sell, but it is not it does not happen so frequently. All right. So third thing we need to know is the cost. What are the costs involved when you want to buy ETF? So number one is you must know passive funds always have lower expense ratio. So when you buy into passive funds, the asset management fee is generally less than 1%. Okay, when you buy a mutual fund, it is in Malaysia is about 1% to about 1.5% every year they charge you. So these are incentive for the funds management company and also the fund manager. So number two is a brokerage fee. You need to pay brokerage fee very minimal only, like how much you pay for when you buy and sell stocks. Number three is the bid-ask spread. Okay, you must observe the bid-ask spread. Sometimes the spread can be wide. Sometimes the spread can be wide, so you want to buy when the spread is tighter. So as you know, ETF is actually a very affordable way for you to go into that and also have an instant diversification into a basket of asset under the portfolio. So you may not cost you a lot, like when you buy mutual fund. The moment you buy, no, it is you need to pay the no you need to pay initial sales charge of about 5.5% to the financial advisor or to the unit trust agent. Okay, so the moment you invest 10,000, right, you literally the amount invested is only 9,005. Okay, for example, let's say if it's 5%. So but if you buy into ETF, you won't have to pay the initial sales charge. What you need to pay is only the brokerage fee, which is less than 0.5%. Okay, all add together. So ETF is a more affordable way, for you to have exposure to a basket asset, in a unit of funds. So how do we evaluate an ETF? So number one, you must know the performance over the years. Does the index that they track perform? Okay, is it go up or is it go down? So you must know exactly what the index, what the underlying assets are, so you know that how is the performance like. Number two, you must know the expense. Go to the issuer website and find out how much they charge you every year. Number three, volatility. You must know how is the volatility of this ETF. Is it a highly volatile or is it lowly volatile? Number four, dividends. Okay, whether the underlying asset give you dividends. Number five is issuer. You must know whether the issuer is reputable or not, have a track record of issuing and managing the exchange traded funds. Okay. Now, some of you may be asking, hey, Shane, I see the ETF no volume one. So your question is, aren't ETF illiquid? Okay, ETF actually liquid or not? So this is the common question that we receive. Now, here is the two things. Now, volume versus liquidity. So volume actually tracks the transacted volume, okay, transacted units of a particular security. Okay, but liquidity means that whether it's easier for you to buy when you want to buy and easier for you to sell when you want to sell. So these are two quite similar thing, but actually they are different. Okay, now when you want to buy and sell shares, so you could see a lot of people are quoting for B and Rs, people are queuing for B and also queuing for offer ask price. So there are liquidity in the market, but then you see how much volume is built up. But for products such as structured warrants or for example ETF, we actually have this market maker that provide liquidity. Okay, some ETF you see no volume means maybe not many transacted volume, but actually there are still liquidity. So volume does not equal to liquidity. So this is the idea here. Okay, volume does not equal to liquidity. Volume just represent the transacted units of ETF or shares that have been transacted, but liquidity means whether there are people who quote you on the bid and quote you on the ask. So you will see that ETF in Malaysia may not as high volume as shares yet, but rest assured ETF on Bursa Malaysia has liquidity. So remember, ETF are always liquid because there's this group of people called the market makers. So what are their role? Their role is to provide liquidity in the market by putting up bid and ask prices at the current fair value of the ETF. So this is their role. Okay, like if you have learned about structured products like structured warrants, you know that the issuer has market makers in the market to give you the bid and ask. The same for ETF. The ETF will also, the fund house will appoint the market makers. They could be the securities firm or the investment banks who go into the market and constantly give you bid and ask price at the current fair value of the ETF. So they will always give you the bid and ask, so you can easily buy and easily sell. So don't see that the volume is very low, but actually there are always liquidity. So when it comes to liquidity, it is good that we focus on the buy queue and sell queue. So this is a screenshot that I copy from my trading screen. So if you don't want to focus on here, you don't want to focus on volume. Okay, sometimes you will see volume 0. Okay, but actually even though the volume is 0, So there are buy queue and sell queue here. So you can easily get out and easily get in. You see there are quoted buy price and then sell price, and there are queue here. Okay, so there are always people who quote you on the buy and quote you on the sell. So these are the job of the market makers who constantly give you, you know, bid and offer. So focus on the bid and ask quantity, not on traded volume. So how do we know if the current ETF price is fair? Okay, so now the good thing about this is that you can actually go to Bursa Marketplace website, go to bursamarketplace.com/market/the-market/ETF. So you'll be able to see all the listed ETF there on the Bursa Marketplace. And then what you need to focus on is this column, IOPV. Okay, IOPV will stand for Indicative Optimized Portfolio Value. So this IOPV is updated every minute, but it is delayed for 15 minutes. Okay, it is delayed for 15 minutes, but every minute it will change if there's any NAV change. So this indicative optimized portfolio value will tell you what is the fair value of this ETF. So if you notice that the bid and ask is too wide from the IOPV, then it could be oversold or overbought. So you may not want to buy it a little bit over price or sell it a little bit under price. So you may want to wait until it is closer to the fair value, only you buy or sell. So this can serve as a reference. Okay, indicative optimized portfolio value, you will know. Or you can go to the issuer website, they will also tell you the NAV. A good issuer will always update you the NAV by the end of the day. Okay, so these are the good issuer. So let's look at some of the ETF performance. So this is an example, a performance of this ETF, ABF Malaysia Bond Index Fund, stock code 0800EA. So if you look at this over the past 5 years, so like the name suggests, this bond index fund tracks bond. If over the past 5 years, how is the performance? Is that the performance as of 30th of September is RM1.24. So 1.243. So this tick size is about 0.1 cent. So the 5-year return on equity, return of investment is 14.9%. So if you hold it for 5 years, if you buy into this ETF, hold it for 5 years, you get about 14.9%. Of course, you won't expect a high return because what is the index that is tracking? It's a bond. It tracks the Malaysia Bond Index Fund. Okay, so you won't expect a very high yield because this is tracking a bond. So and then on average, compound annual growth rate is 3.58%. So you can easily get in and out. So yeah, it is probably the rate of the fixed deposit before. Okay, of course, right now this return can beat the FD. So if you want to have safe return, you can invest in bond, but because we are not high net worth individual, so we may not be able to buy in the bonds. So for retail investor, you can consider a bond fund. Okay, the bond ETF. So the second ETF that we, let's see the performance over the past, 5 years. This is the ETF that tracks the KLCI. So 0820EA. So FBM KLCI EA. So over the past 5 years, because our KLCI trend down, okay, because of COVID-19, the market went down. So the ROI for the past 5 years is negative 3.74%. Compound annual growth is negative 0.55%. So if you are bullish on the FBM KLCI and you want to own the 30 largest companies on Bursa Malaysia, and you don't want to buy it one by one because you don't have so much capital, so much bullet to buy each one lot, then you can buy into this ETF. Okay, it actually mirrors the FBM KLCI movement. It can instantly give you diversification into the 30 largest company on Bursa Malaysia. Now this is the this is the ETF issued by Principal Asset Management. Okay, so A40 means ASEAN 40. So this will allow you to buy into the 40, some of the biggest 40 companies in Malaysia, Thailand, Singapore, Indonesia, and Philippines. So Over the past 5 years, this ETF performance is negative 2.03% and compound annual growth rate is negative 0.41% a year. So of course, equity market is not doing so well, so now it's all negative. But if you compare the performance until, let's say until late 2019, then of course it's a positive return. So this is the ETF that can give you exposure into the 40 largest companies in the Southeast Asia, in ASEAN, in particular Malaysia, Thailand, Philippines, Indonesia, and Singapore. So this is an ETF that can give you the exposure into the top 50 largest companies and the most liquid Chinese company listed on Hong Kong Stock Exchange. So issued by Principal Asset Management. Over the past 5 years, these 50 largest Chinese companies listed on Hong Kong deliver you 19.8% return over a 5 years period. Of course, we also have this issue of trade war between US and China that affect the share price a little bit, but compound annual growth rate over the past 5 years is 3.69%. So this is the performance. So the next securities you can consider is Msci ETF ID. So this is an ETF, Sharia compliant ETF issued by IVCAP. So the 5-year return for this MSCI Malaysia Islamic Dividend ETF is 39.4%. Okay, over the past 5 years, it delivered you 39.4%, compound annual growth rate 6.87% a year. So this is the result. Okay, if you want to buy into high is Sharia compliant ETF that tracks the high good dividend yield companies. So this is the ETF that you can buy into. So next, this is the another ETF issued by IVCAP that tracks the US 50 Titans 50, which is also Sharia compliant. So this is a issue for about 2 years since 2018. So the return on investment since the inception is 39.3% in 2 years. Okay, this is 39.3% in 2 years. Compound annual growth rate is 15% a year. So if you want to have exposure to the US, stocks, Sharia compliant stock in US, then you can buy into this ETF. So the next ETF is issued by Afin Huang. This is a Trade Plus Sharia Gold tracker. So this track the gold ETF. If you want to only have gold exposure without having to buy and store gold in your house, then you can buy into this ETF. Okay, Sharia compliant as well. So return on investment since inception is 43.7% over the past 2 to 3 years period. So compound annual growth rate is about 24.2% return a year. Now, since that gold is on a bullish rise right now, gold is supercharged since the unlimited QE was rolled out by United States of America. Then the gold price, US dollar weakens, gold price strengthened. So you can actually invest into this gold ETF and have exposure into the gold run. All right, so this is some of the ETF that you can buy, and this is also Sharia compliant. To our Muslim friends here, this is Sharia compliant. So these are some of the performance of the ETF on Bursa Malaysia. So on how you can use the ETF is, of course, ETF we have, you can use a different strategy if you just want to have you want to buy regularly. You can actually buy it regularly on an interim basis, okay, to build up your investment portfolio. If you don't want to have your don't have a direct investment, okay, you can buy through ETF, which is indirect investment. You buy through ETF through dollar cost averaging strategy, so you can slowly accumulate this asset in your portfolio. Is one of the ways. So secondly, some people will want to some people will want to use ETF to go into the foreign, to give you a foreign exposure. So you can actually use ETF to give you a foreign exposure, because for the local stock you can actually buy and sell yourself. But for the foreign stock, maybe it is not so easy for you to buy and sell, and you want to have a, because if you want to buy into a foreign company, maybe you want to convert your currency into different currency, so that one the bank will also charge you a currency spread. So if you can actually use ETF to give you a foreign exposure into all these foreign shares in the US or in China, in Hong Kong, so this is could be some of the ETF strategies you can use. But of course, you must know what are the assets that you buy into, what are the assets you buy into, so that you know whether you have market risk, what kind of market risk you'll be undertaking if you invest in this kind of asset. All right, if you want to have a big stock, big cap stock, then you can buy into KLCI ETF or all the 40 largest company in ASEAN or the 50 largest company in China as well. So these are some of the ETF strategies you can think, but most importantly, you must know what are the assets that the ETF tracks. All right. So yeah, why we need to invest in ETF? So number one, now we have talked so much about ETF already. So now we talk about why. Number one is 99% of actively managed US equity funds underperform. Okay, so this is what happened. What is posted in Financial Times. We noticed that in the US, not in Malaysia. Okay, in the US, right, 99% of actively managed fund underperform the passive funds. That means the passive funds, right, deliver better performance than an actively managed fund, because actively managed fund will because they constantly buy and sell, right? So it will also the brokerage fee and the transaction cost will also take into the net asset value and reduce the net asset value, because constantly need to pay. So this is reported in the Financial Times. So over the years, we've seen that there are more outflow of funds from the mutual funds market in the US, and there's a more inflow of funds into the passive funds such as ETF. If you look at the ETF asset growth, so ETP stands for exchange traded products. Okay, if you look at exchange traded products asset growth over years, right, you see that it is also forecasted, okay, to achieve a significant amount of growth, okay, over the years. Okay, if you look at some of the biggest ETF market in the world is in the new NYSE ARCA. So in NYSE ARCA, right, the asset of it is in a humongous amount. Okay, so even Warren Buffett also endorsed ETF. Warren Buffett has said that he will leave behind 90% of whatever money he hasn't already given away, not in Berkshire Hathaway shares, but the Vanguard S&P 500 fund that ordinary investors are already buying up so quickly. Okay, so ringing endorsement don't come any better than that. So this is published by the Street in October 28, 2016. Okay, so this is also coming from one of the world wealthiest investor who actually recommend people to go into ETF, because actually it represents the market. Warren Buffett always say buy America. Okay, so it's also endorsing buying into ETF that invest in a broad base of American economy. So another reason why I can consider ETF is that the entry fee in the Malaysia's fund management industry is among the highest in the world. So this is reported in July 2016. So by the Star. Okay, so if you know what are the fees that we need to pay when you go to buy into the mutual fund, we need to pay initial sales charge, we need to pay the asset management fee, trustee fee, maybe the fund switching fee. So these are some fees that you need to pay when you want to invest in mutual fund. But if you invest in ETF, you only need to incur asset management fee and trustee fee every year. Generally, it's less than 1%, and also a very low brokerage fee. So because the distribution of the fund is done online, so those people inventing ETF actually wants to make fund management more affordable to the retail investor. That's why they are constantly thinking, how do I make a mutual fund more affordable to people? Because a mutual fund, if they rely on unit trust agents to sell, then unit trust agent also need to make a living. So they have to incentivize them enough so that they'll be able to make a livelihood out of this being a unit trust agent. So the people are thinking how to make it more affordable. So one way to make it more affordable is to make it listed on the stock exchange. So when you list, like you list a fund on a stock exchange, so you get rid of the middleman. So when you get rid of the middleman, which is the unit trust agent or the financial planner, you get rid of the distributor, fund distributor, then you'll be able to make it more affordable. So this, just imagine exchange traded funds are like the mutual funds that are traded on the stock exchange. All right. So yeah, right now I've concluded my session on sustainable growth through ETF. So if you have any question you want to ask me about ETF, you can post it in the Q&A box. Then I will do my best to answer. All right. So let me take a sip of water while I see your question. In the meantime, let us uh, uh, let us do a poll. Okay. So let me just launch a poll to know exactly what type of investor are you. Okay, so you may answer the poll here to let us know whether you are long term, short term, or both short and long term investor. While we are doing the poll, if any question, you can write to us in the Q&A box. All right, so we have about 60% of you voted. So let's do another 5 seconds. All right, so let me share with you the result of today's poll. So 30% of you are long-term investor, 8% of you are short-term trader, while 63% of you are, have a different strategy. Okay, both short and long-term. Okay, so this is your your investment style. So okay, I've already have quite a number of questions on my screen right now. Okay, number one is, can we get a full list of ETF available in KLCI? Of course, just now I've shown you the full list. There are about 19 of them. Okay, so you have already got the full list. If you want to see the full list, right, you can actually go to Bursa Malaysia website. Okay, let me show you. Okay, so this is Bursa Malaysia website. You just go to come to here, uh, come to equities. So our product and services. So this is exchange traded funds. So you will see the whole list of ETF here. You know that these are ETF. Then what are the, when is it listed? Then who are the issuer? Who are the market makers? You will see who are the market makers. Then you can see the issuer website. Then whatever this is what are Sharia compliant, you can look into that. And who are the issuer? Who are the market maker? These are issuer website. And then what are the underlying asset? You can know exactly what are they in the Bursa Malaysia website. So just go to I think it's under trade, product and services, under equity. You click this product and services under equities. Then you click exchange traded funds, ETF. Then the full list of ETF will show up here. Okay. All right, so this answer the first question, how you can get the full list. So let me see the next question. When this by Elvin, when we buy the ETF, we are paying based on the price shown in our trading account, the market price, correct? So how does the NAV show in our trading account after that? Does the NAV already deducted all the ETF fee? Yes, the answer is what you are seeing. Actually, for investor, right, when we buy ETF, we actually buy at the market price. And the market price should more or less closely mirror to the NAV. So if you notice that the market price is largely different from the NAV, then you don't want to buy into this ETF, because it could be overbought or oversold, or there could be an absence of a market maker that do not quote you the fair price. So the NAV is already net off all the fees that is compounded on, that is calculated on a daily basis. So on every day, they actually deduct a very minimal fee that's deducted on a daily basis. So the NAV already reflect all the fee on a daily basis. Okay, so the NAV will not show in your trading account. You will only see the market price, and the market price should in theory should follow closely to the NAV, except when there's an overheated market or there's an absence of the market maker. So for assurance purpose, you can refer to the you can, if you want to have a real, not real time, you want to have up-to-date NAV, just go to Bursa marketplace. They give you the IOPV, indicative optimized portfolio value, or but it's delayed 15 minutes. So but it's updated every minute, just delay 15 minutes. Okay, so you will know what is the net asset value of this ETF that you're buying. The next question is by King Ming. Okay, actually, what are derivatives? Okay, and there's also ETF you mentioned in Dow Jones but listed in KLCI. What does Dow Jones have to do with KLCI? So let me first address derivatives. So derivative is is like derivative is products that derive from the underlying asset. It is kind of like complex financial instrument that is designed to track uh, the performance of the underlying. Okay, it could be a futures contract, it could be a options, it could be a swap. Okay, it could be other derivative, credit default swap, and so on. There's a lot more complex thing. Okay, so these are derivative. Of course, derivative want me to answer that is very complex, involve a lot of complicated theory. So just remember, derivative itself is a financial instrument that derive from underlying asset. Okay, so why does all the ETF has to do with Dow Jones? Because these underlying are tracking the Dow Jones index. So that's why it has the word Dow Jones. So the ETF that's listed on Bursa, the underlying asset that it tracks are listed on Dow Jones. Okay, so that's why it is related to Dow Jones. So no, Afifa asked, what are LNI? Once again, LNI are leverage and inverse ETF that give you the double exposure or inverse exposure to the underlying asset track, so on a daily basis. So if 2 times leverage ETF will give you 2 times performance of the underlying asset track. For example, if you go up 1% on a single day, if you buy 2 times ETF, you up 2%. If you buy inverse negative 1 times ETF, then you will down 1% on that day. So this is a LNI ETF, leverage and inverse ETF. Most of the ETF do not have much volume except gold. This is from Patrick. Yeah, this is one of the challenges that the market face right now. But obviously, there's liquidity, even though there's no volume. Okay. Let me see the next question. Raymond, this is a question from Raymond. Or you address the question to Bursa, is it? Then of course I'm not from Bursa, Malaysia. So let me so I can't address your question. So Kenmeng also asks, IOPV tells fair price point in time or based on asset holdings. So indicative optimized portfolio value will tell you the price as of that time. What is the fair price of these ETF holdings as of that time? Okay. So Alvin is asking, can you show us what is the right price to enter given the bid ask price with IOPV? So long that it did not differ so much, like maybe differ too much from it, like it's just like 1 to 2 ticks, that is still fair lah. If it just differ 1 or 2 ticks, that is still fair. Okay, it's not like differ like 10 ticks, then it's obviously a bit too high. Can you explain how the ETF basket creation and the redemption works? So this is by Kwong Chun, okay, who asked me how does the ETF basket creation and the redemption works. This is quite technical, okay. Now just imagine that there are, just think that there are 2 markets, okay. If you want to understand how the ETF creation and redemption work, there are 2 markets. One is the primary market, one is secondary market. So the issuer will issue the issuer, for example, Afin Huang, when they design the funds will track the underlying asset. So when there's more demand to buy the funds, then obviously the issuer need to create the units. So the issuer will create the unit, and then the market maker will buy the unit from them. So this is called a primary market. So the market maker will buy the newly created units from the issuer, and then the market maker will sell this unit to the secondary market retail investor like us. So the retail investor will buy from the market maker. So after, when the market maker want to sell, when the retail investor want to sell, retail investor will sell to the market maker. Market maker will buy from you, and in return, market maker will redeem back this from them, from the issuer. So this is in the primary market. So the primary market involve the issuer and the principal dealer, and principal dealer usually distribute this to the institutional investor, and then the issuer also deal with the market maker who sell or buy back these units of ETF from the secondary market from investor like us. All right, so this is how the creation and redemption work. So when there are more demand, so there will be more units that's created, and then the issuer will have to use this money that investor invest in to buy more underlying assets. So when they buy more underlying asset, they can create more units for you so they can own. So when there's more supply, that means when they sell back these units to the ETF issuer, so ETF issuer will sell their holdings so that they reduce the units in circulation. So this is how the basket creation and redemption works. Just remember there's a issuer, market maker, and also the retail investor. Retail investor is in the secondary market, but issuer is in the primary market. How to assess the fund performance chart for this ETF? This is by Michael. Okay, how to assess the fund performance? If you have any software, right, then you can also see. For example, if you have a charting software, you can use it. Type in the stock code, you'll pop out, or you can go to Bursa marketplace like what I'm doing right now. You just find the ETF. For example, you want to find 10820, which is the ETF that track FTSE Bursa Malaysia KLCI. Then can go to Bursa marketplace, go to the charts. Okay, then the chart of this ETF will show up. So this is in the candlestick chart. If you want to see, you can also see a line chart. All right, over the years, you see what is the charts pattern is like. So you can see the performance of the ETF over the years. If you want to see candlestick, then put in the candlestick chart. Okay, so this is how you can see the ETF performance. Or you type any for example 2828, okay, which is the gold ETF. All right, again go to charts. Okay, it's also available here, how you can see the ETF performance. Or actually you can, or any software, okay, you can go to 0828. All right, EA. So you see it show up already. You want to see a candlestick. All right, this is a software that I use using chart nexus. Okay, so this you can see the candlestick. Okay, you see recently the gold ETF has a lot of volume. Okay, gold ETF recently got a lot of volume. So this is an example. It is available in the charting software that you subscribe to. Huh? Okay, let me see what is the next question. Is ETF trading still relevant in Malaysia? Okay, when you buy, you want to build sustainable wealth, right? You don't do trading ETF like you, you know, you buy and you buy and hold. But if you want to do trading, then you can trade the LNI ETF that are issued by Kenanga investors and as well as the uh, Afin Huang Asset Management. Okay. How do we know actual backing of an asset of an ETF? Okay. Can an ETF fraud happen? Wow, this is a deep question. I well, I think fraud happen anywhere, right? So I actually, as far as these are regular, these are the what we call that uh regulated instrument by SC. So I guess the regulator will ensure that all the mechanics and the system are in place to ensure that there's to minimize the element of fraud. So how do we know the what are the asset holding of ETF? Okay, for example, let me show you. So this is an example of a issuer website. Okay, you just go to an issuer website, Trade Plus, for example. This is Afin Huang. Afin Huang is one of the quite active issuer in the market. So you can go to the products, for example, you can go to, for example, you go to say Smart Beta Malaysia Momentum Tracker. Okay, you go to the Trip Plus DWA Malaysia Momentum Tracker, you know that so closing price, okay, 1.01, okay, NAV price, you see, very transparent, 0.9849. So the closing price is about 3 cent higher than the NAV price, about 2.5 cent, 2.5 cent higher than the NAV price. So this is still uh, fair lah, because the market makers still need to make a bit of money, right? So it can't quote you exactly the NAV. So the market maker will try to make a few tick out of it for them to provide liquidity in the market. So you know that what are the holdings. You can go to you can find all this information, go to the fund information. You know that when is it listed here. Okay, launch date is 9 July, listing date is 15 July, suitable for what kind of people. Okay, minimum 90% NAV to be invested in authorized securities. Okay, remaining balance will be in money market instrument and money market collective investment scheme. Okay, so what are the risks here is written. Okay, and then uh, base currencies. Okay, what are the fees here? Asset management fee up to 1% per annum. Annual trustee fee is 0.04% per annum. Annual index license fee is minimum 10,000 USD. So this one is just a cost, but it doesn't mean that you need to have 10,000 to invest. Okay, US dollar to invest. Okay, so who are the trustee here? You write who are the manager, trustee, who are the participating dealer, who are the market makers. Okay, so these are all the information here. You can find the benchmark construction. How are they selecting the benchmark? Okay, these are the criteria. The selection criteria is that they will be assigned a momentum score using this strategy, and then the top 20 securities with the highest momentum are added to the index and weighted equally. Okay, weighted equally means each one of these is have a 5% weightage. So rebalance on a quarterly basis. Every quarter they change. March, June, September. So this is how you know the ETF. So how to know the holdings? You just go to the prospectus or daily NAV creation and redemption market. Click download. Okay, agree and proceed. Then on your screen, you will know that. So these are the 20 ETFs here: Bumi Abada, Bursa Malaysia, Dialog, FGB, G-Tronics, okay, Guangchong, Inari, IOI Corp, okay, KLK, Malaysian Pacific, okay, MISC, Penta Master, PPP, Press Metal, QL, SIMW, SK Press, Telecom, Top Glove, VS Industry. So these are the 20 constituent stock in the fund owned by Trade Plus DWA Malaysia Momentum Tracker Exchange Traded Funds. So this is an example of how you can go to issuer website and see the holdings. Okay, So I addressed that question. How do I buy ETF? On which platform? You can buy through any stock broker. Okay. Does RHB TradeSmart have? Absolutely. RHB TradeSmart have a ETF. You can invest. Don't worry. This by Abdul Jalil. Who is the best issuer? Wow, this question really challenge me. Okay, of course I have my view lah. Of course, you want to know, you can text me. I will let you know who is the. Obviously, all issuer are okay. Yeah. So I'm not here to recommend issuer. All right. All ETF come with dividend. Not all come with dividend. Okay. Some of course if it tracks gold, then it can't give you dividend because gold is commodity. How to give you dividend? But if it tracks stocks, then equity ETF will be able to give you dividend. How to get started investing ETF for beginners? Well, if you are a beginner, then you can pick the asset classes, the underlying asset that appeals to you. Then of course you can go into high dividend ETF, or you can go into the big cap stock ETF, that have lower risk lah. How about overseas ETF? Can you access it? Of course, you can also buy overseas that through your foreign brokers, or your local broker. So long that your broker provide you access to a foreign ETF, you can also buy that. Of course, this session is by Bursa, so of course we only cover the scope is only cover Bursa listed ETF. Okay. Does ETF give dividend? Yes. Okay. You can buy ETF through all stockbroker. Yes, when you buy the ETF, you need to have so long that you have a stock trading account, so you can buy ETF. So there are so many questions on the ETF broker. Can I trade ETF on like Rakuten and Fund Supermart? Of course, you can trade ETF on Rakuten. Fund Supermart is a little bit. Let me see. If you go to Fund Supermart, you're actually buying unit trust. Okay. I think recently iFast, which is the owner of the Fund Supermart, also got a participating organization license of Bursa Malaysia Securities. So I'm not entirely sure whether you can buy ETF on Fund Supermart. As of now, I think you should not be able to. I believe you should not be able to as of speaking. But if they have a stockbroking license, then you may be able to. I think recently they got a stockbroking license. Okay. Why the ETF volume, gold ETF volume so low? Okay. Today, obviously I don't know, because there's obviously the reason is there's no market don't want to buy and sell with this gold ETF. How to explore more about ETF? Or you can go to Bursa Marketplace and or Bursa Academy to read more about ETF information. Or if you can go to a issuer website, or responsible issuer will also give you some education. For example, you can go to issue website. There's also education here. You can read more about the ETF. Okay, there are also learning materials, article and commentaries, or videos. Okay, you can read more about it from an issuer website. For example, this is just an example of an issuer that I often go to. Okay, loading a little bit slow, but issuer will usually provide some idea for you on how you can explore more ETF. What factors decide the price of ETF? Of course, number one, it tracks the underlying asset. Underlying asset go up, then the price will go up or go down. It is of a then it's the market forces lah. If the market forces beat up the underlying asset, then of course the ETF price will go up. Secondly, is a market maker. Market maker will always quote you. So a good market maker will quote you at a fair price. Okay, so this is the factor price affecting the price of ETF. How do one verify the financial strength of an ETF issuer? I believe you are asking about ETF issuer. So number one, the ETF issuer must be transparent. Okay, so this is for example education provided by Afin Huang, huh? So the ETF must be transparent. Issuer must have a transparent. Okay, will tell you, for example, uh, what is the closing price right now, what is the NAV price in a different currency denominations. So must be transparent with their holdings. Okay, with their holdings, you must know what are their holdings right now in a new China ETF. You must know what exactly are their holdings. So it's responsible giving you a daily update to their holdings. What is their share price, market value, so if you buy into this, for example, Trade Plus New China Tracker Index, that essentially invest in service companies or consumption-based companies in China, which have Tencent, Alibaba, ANA, Meituan, Dianping, JD.com, Ping An Insurance. You see, all these names are really Pinduoduo top notch. Okay, so these are the world class companies that this ETF tracks. So responsible issuer will give you a daily holding, publish it, and let you know the NAV. Okay, and make sure that the market maker quote you at a fair price. So this is what the responsible issuer will do. All right. With that, I want to thank all of you for tuning in to this webinar, Sustainable Growth Through Exchange Traded Funds. I hope that I have shared enough information with you and knowledge with you about exchange traded funds so that you'll be able to invest wisely and learn when you should use this instrument, exchange traded funds, in your investment portfolio. Okay, so wish you the best in investing and then see you on Wednesday. All right, bye bye, everybody.